Hi, good morning, everyone. Louis Porcelino, Manover Market, and this is the ES Morning Call for February 3rd. All right, yesterday on the closing video, I thought that the market would go to 22, try to test these highs. We actually extended to 28. That's our magical number, that blue line. I keep showing you this, and I think, we're in this range from basically from here down to the lows that we made yesterday. So last night we had a high of 28, low of 2007. 2007. All right. Here's the market here. We're actually, there's the high up here. We're going to put our bull bear zone today at 2012. 2012 right here. Okay. We've got the top of value at 2006 half. All right. This is always concerns me. Big target here, 1993 half. Even though we had that rally of 2017, the most volume was done at 1993 half. So that'll be our point of control. And then we'll have our bottom of value at 1981 half. 1981 half. So after the rally yesterday and after the last night, we pulled back to the 2020 area. All right, this is basically a 30-minute chart. You can see that the pivot on the 30-minute pivot is sitting at 2005, so getting back inside value. All right, so currently, let's take a look at the 5-minute. I put this up here because I want you to see where the value area is, and when it's early, it doesn't print very early. All right, so as we speak, 2018 and a quarter, let's call it, is the 5-minute pivot. So looking at the Dow, the Nasdaq, and the Russell, they're all actually. I got the Dow's at 17, 13, 12. We're testing it right now. I've got the Nasdaq at 41.86, and the Russell is threatening to go through it as we speak. So in the morning, and we take a look at this. This is a program that Pat's written for extension. We went over there and made it. So I would, I'd be looking for a sell-off this morning based on the inventory from last night, and so on. Uh, so still have a bearish bias, even though yesterday we had a bearish bias. The market closed higher. We did go down and make the new lows, and down at the lows, I told you guys that it was a little bit oversold, so you needed to protect yourself. Stay with me on Twitter, get the updates, and because like I said, this is dynamic. As you can see, the 5-minute pivot changes. The 5-minute pivot has actually been kind of erratic because of the market volatility and so on. But as far as we're concerned, the market is still looking like it's in a downtrend for me, even though it's in this. I wish you'd get it over with. Go test that 61 half, and then we can say, okay, we made a nice correction. All right, oil. Okay, oil in a bearish mode. I'm sorry, in a bullish mode. We've got the top of oil at 49.57 value. 49.38 yesterday was the VPOC or the point of control. 48.41. I'm going to put the bull bear zone right here at 50.21. 50.21. All right. I think what's going on with oil is it's been in that bull market or bear market. I'm sorry, and I'm going to give you see if I can. If this is the right one. I did a. All right. So what I did here, I don't like to use this time frame, but I did it so I can show you the gaps. So here's a gap right here in oil, up to $52. So I think that oil is looking to go to fill this gap right now. Okay, we filled this one right in here, right now at $49.80. I think oil is going to go fill this overnight gap at 52. All right, that's what I think what's going on in oil. Do I think oil is out of the woods? No, I think oil is just making a retracement based on that. We're a little bearish on gold. Uh, Went up and made its highs. We got our bull bear zone in gold at 1,275. You got the top of value at 1,278. It's gone out of value, and which was the bottom of value area low is 1,271. So we have a negative bias today on gold, and that's why I think it's getting a little retreat based on the stock market rallying back and oil rallying back. I think gold was like a safe haven, and now we're getting some profit taking. It's down to $8 on the night. Okay. All right. Bonds. ZB. Bonds had a sell off overnight. Could be expected. You know, those bondholders up there that have been long bonds for a couple of years are taking their profits. I think they said that it was the lowest bond rate. Was a 30-year bond was at 1.87. 1.87. So we've got the top of value of 151.06. We've got the point of control of 115 a quarter, and we've got the low value at 150.20, and then I put the bull bear zone right there at 150. So if bonds are going to rally, they're going to have to get back up through in here and get back into value today. Bonds had a little bit of a sell-off, and I think that's all about profit taking. All right. So back to S&Ps. Show you this profile. We got some issues to deal with. We've got some single prints here from 2006 down to 2004. As you recall yesterday, I put out on Twitter, let the market make up its mind. And this is the other thing I don't like. This thing here is not, this is down at the low. I don't think that's finished. So, I think that's why it's just confirming we're still going to be in a range, and it's going to go to both ends of the range, throughout the week. So, yesterday afternoon, I actually put out on Twitter that you're going to get chopped up, let the market make up its mind. And then yesterday and I said basically when we took out the 5-minute pivot that it really didn't mean a lot until it takes out the high, which was 2004 at the time. And then when we took out 2004, we went up to 2017. And the other thing is I'm not going to be, unless all the indexes are agreeing, then that's when I'm going to jump on any position. So yesterday afternoon, when we did take out 1996, we took out the 5-minute pivot, but the only one that didn't take it out was the Nasdaq, and they weren't really strong. So I basically, put it out that the Nasdaq's not going. So let's, wait and see. And those are the ways you got to trade. After highs and lows have been put in, if you try to guess from the middle, those things are going to cost you. So don't guess from the middle. Let the market, with this volatility, let the market make up its mind and then try to jump on with it. Okay. So remember, our bull bear is only going to be at 212. We've got our 5-minute pivot at 2018. We've got the top of value all the way down here at 2006. And like I said, alarming to me is when we have a VPOC that's all the way down, even though we have a rally. That means there was still a lot of volume put down here. Let me get to that. All right. At 1993 half, this VPOC down below, to me, becomes an attractor. So with this range-bound market, let the market make up its mind this morning, and let's see where we can go from that. All right. We've got, I'll be on the Top Step Trader at 8 o'clock. So, you can come back to these charts. I'll be going after this stuff. Remember, go to the site, register. It's free. www.manovermarket.com. And things that I go over here, we have in writing a lot of nice analytical stuff that you can write down and look at throughout the day. And then also go look at the blog. Chris Kahn doing a great job with the blogs. If you have any ideas for blogs, things you'd like to hear us explain, would you please just send an email at manovermarket@gmail.com, and we can take a look at it, and we'll put up a blog, and if we can answer the questions. All right, everybody. Thanks for all the support. We'll talk to you later. Bye.